Good evening, dear students. So today I've come with part B of perks, which is perks taxable for all employee. In the last class we discussed about perks where the employee will not have to pay tax, but today we'll discuss about those perks where all the employee, whether government or non-government, all the employee, they have to pay tax. So first we'll discuss about rent-free house. Now, rent-free houses are like this. The employer will provide accommodation to the employee and the employee will not have to pay any rent. Okay, so this is rent-free accommodation. Now, since he's providing that accommodation and the employee will not have to pay rent, so it's like a perk, right? Now, the employee doesn't have to pay anything. So the rent become a perk. The value of the rent becomes a perk. So this perk has to be taxed. It's taxable. Now, when we talk about rent-free houses or rent-free accommodation, you have to remember two cases. There are two different cases and both the cases will be tackled in a different way. And those two cases are case 1 for the government employee and case 2. Case 2 is for non-government employee. So case 1 we'll discuss separately, case 2 we'll discuss separately. Now for case 1, if in the question they mention government employee and all, then what you have to do is that for that rent-free accommodation, you have to check what was the license fee or the rent fixed by the government. If the license fee is given or the rent fixed by government is given, that particular amount will be taxable. So finding out the value of the perk in case of government employee is very simple. Just the license fee and the rent fixed by the government. Now case 2, which will be a little lengthy and you might get confused to understand this, but once you understand, it's very simple. It's not so difficult, okay? Just a bit confusing, but I know you people will understand. Now in case 2, that is for non-government employee. Now for non-government employee also, there are two cases under this. Now the first one is when the house, the room which is provided is owned by the employer himself. That means the employer is the owner of that building or that house and he has given that to the employee. That is first case, okay? And second case is the house or the building which he has provided for rent to the employer does not belong to him. Maybe he himself took it as a rent from somebody else and he gave it to the employer. Okay, he has taken on hire and then he gave it to the employer to stay there for free. Okay, so those are the two cases. So first we'll discuss the first one, that is accommodation which the employer owns, owned by the employer. We'll discuss about that first. Now if the house is owned by the employer, the value, how much would be the value of that particular room or the building will not be known because it's owned by him. So he doesn't know the value, okay? So in that case, the value is very uncertain. So in that case, you can know the value, you can make out the value by these three things, okay? If the house is located in an area where there are lesser than 10 lakhs people, that means the value you have to take is 7.5% of the salary. And if the building or the room is located in an area where there are more than 10 lakhs people but lesser than 25 lakhs, okay, not so crowded, medium, so in that case the value of the perk will be, of the house, of the room will be 10% of salary. And likewise, if population is more than 25 lakh, lots of people, so in that case 15% of salary. You just have to remember these three if the house is owned by the employer. Now second part, that is if the accommodation, the house is not owned by the employer, he himself has taken it on hire. So in this case, the value is clear because the value is what the employer is giving to the person from whom he rented the room, right? So the value of the perk will be the actual rent paid by the employer or 15% of employee salary, whichever is less. Now let's go to number 2, that is concessional rent house. Now in concessional rent house, you have to exactly follow point 1 exactly, and then you have to subtract the amount which is paid by the employee. Okay, now Concessional house rent is like this. The employer has given some concession, like he is not giving it for free completely. Maybe he is giving some discount, some reduction. So if the rent is 10,000, the employer is paying 5,000. 5,000 is paid by the employee. So that's why. So this is how it is. So first you calculate the value exactly like how you do in point 1, and then you subtract whatever is paid by the employee. Just subtract. That's the extra point. Subtract what the employee, the worker, has paid as rent. Now let's move on to point 3, that is obligation being paid by the employer. So obligation means there will be many expenditure which employee should pay, but instead of employee, the employer pays. So in that case also it's a perk, and those type of perks, it's taxable. Say for example, let's give some example, like gas, electricity bill of the employee, which should be paid by the employee, but the employer is paying. So the actual expenses met by the employer, those are taxable. Also salary of domestic servant, maybe for personal use, and then maybe the employer is paying it, so that also is a perk, and that also will be taxable. Now let's move on to point 4. Now point 4 talks about some life insurance or any such policy being taken by the employee, and if the premium is paid by the employer, if the premium is paid, that is perk, and that premium which has been paid will be taxable. Now point 5 is about the sweat equity. Now what is sweat equity? Sweat equity means equity shares which are issued by the company to its employee or the director at a discount and without taking any cash. Okay, so if such type of sweat equity shares are being provided, so the discount which the company has given, that is a perk, so that particular amount will be taxable. Now let's talk about point 6. Now if employee has some policy, has done some investment in superannuation fund, and the employer is also contributing, if the employer is contributing, then there's a certain limit, and if he contributes more than that limit, then that extra will be taxed. So the limit is 1,50,000. So say for example, employee has taken superannuation fund and employer is also contributing, say for example 2 lakhs. Okay, now how much is the limit? 1,50,000. So he is contributing 2 lakhs. So how much extra he has contributed? 50,000. So that 50,000 becomes taxable. Okay, so this is how it works. Now let's move on to the next one, number 7, that is other fringe benefit. Now under other fringe benefit, there are 9 things. So let's go to the first one, that is interest free or concessional loan. Now interest free or interest charged at a concessional rate on loan given by employer to employee or any member of his or her family is a perk. Okay, is a perk given to the employee, and it is chargeable to tax. One more thing you should remember in this is that if the loan given, the total amount is 20,000 or lesser, then it is not taxable. Okay, only if the loan amount exceeds 20,000, then the perk of interest shall be calculated. Okay, and also if the loan is given for medical purpose, medical treatment, then it is not taxable. Point number 2, traveling, touring, accommodation. If there is any expenditure with respect to traveling, touring and accommodation, all this also falls under perk which are being taxed, which is taxable. The next one, food or beverages facility. So if the employer is providing free food or non-alcoholic beverages to an employee, it shall be treated as a perk for the employee, and the value of such food and beverages will be taxable. But you have to remember one thing, if the employee is in a very remote area or offshore, then it is not taxable. Okay, it is taxable only if he's not in the remote area or in the offshore places. And also please don't include tea or snacks. Okay, those are exempted. Tea and snacks, they fall under refreshment category, not food. Okay, so those are not taxed. Now, if the employer, instead of providing food beverages, if they provide some coupon like to buy food in a particular from a particular counter or shop, then in that case, if the amount the coupon amount up to 50% is exempted, because they will not be able to use that amount for anything else. They have to buy food, right? So up to 50 is exempted. Above 50, then it will be taxable. Now the next one, gift or vouchers or token facilities. So here, if the employer is giving any gifts or gifts in kind to an employer, and if the amount of the gift is more than 5,000, so in that case, the extra more than 5,000, whatever is more than 5,000, that will be taxable. Say for example, if he's giving a gift of 6,000 rupees, so 5,000 is exempted, 1,000 extra, that extra will be taxable. One more thing you have to remember here is that if the employer is giving cash as a gift, then the full amount will be taxable. There is no exemption of 5,000 if it's cash. 5,000 exemption is available only if the gift is in kind, not in cash. If it's cash, everything will be taxable. Number 5, credit card facility. So here, taxable value of the perk shall be the amount spent by the employer to provide this type of facility to the employee or any member of his household. Next is club facility. Now, if in case the employee or any other member of his family, they have the membership of any club, and the expenditure, the club membership fee and all of those are reimbursed by the employer. So in that case, that reimbursed amount is a perk, and that will be taxable. Now the next one, that is movable asset. If the employee is using movable asset of the office, like of the which belongs to the employer, then in that case the how do you have to calculate? 10% of the cost. Okay, 10% of the cost of that particular asset will be taxable. Now you have to remember, this does not include computers and laptop. Those are exempted. But apart from that, if there's any other asset which is being used by the employee, then 10% of the cost of the asset will be taxable. 10% of the cost if in case the asset is owned by the employer. If the asset is not owned by the employer, he has taken in hire from somebody else, then in that case, whatever rent the employer is paying to get that asset will be the value of the perk. Now the last one, which is any other benefit or amenity provided by employer. So in case employee has been provided any other benefit or amenity or concession, privilege, etc., which is not mentioned, because there are so many, not everything can be mentioned, and if those are provided by the employer, it is fully taxable. So that's it. These are the perks which are taxable. So please study this properly. I've provided study material, so from the study material also you study, because here I have just kept the points. If you go through the study material, you will understand even better. So please study well. Thank you.